Good morning, everybody. Hope you had a great weekend. It was hotter than blazes here in Wichita until yesterday. And then we were overcast, which kicked the humidity up a bunch. So it's a great weekend. Probably watched a little too much football, a couple of naps, a little shopping. So life was pretty good. I hope it was the same for you. We're going to start the week with financials lower. And this is pretty typical after we have an auction week. The primary dealers utilize the next week to sell futures and set up the next round of buying for the 3, 10, and 30 year. We do have news today. We have markets PMI. And that market PMI is expected at 57.8. This number could come in higher than forecast, as it has recently. People will pay attention. They won't trade that number because the ISM index is coming in. Last month was 57 plus. This month it's at 56.8. This number could come in higher than forecast. The ISM numbers can typically come in higher than forecast. And construction spending at plus 0.9. So this is going to be the number one focus. We come in with gold, crude, the yen and the euro down, currencies down. We come in with the E-mini stock indexes around the globe, the E-mini and the dollar higher. The economic news out of China and Europe suggests economic slowing. Everybody's hopeful that this week's U.S. numbers will come in much higher than forecast or higher than forecast. Growth in the United States will kick in and support growth around the world. The second big piece of news this week that the market will focus on is the ECB rate cut, which it's hard to see how they can cut it further, but it's at 15 basis points right now. It's supposed to be cut by another 10 basis points to 5 basis points, so that's 50-50. That's a big piece of news. Then Friday's non-farm payroll numbers. So we have a big news week. We have a lot of expectations for stronger than forecast economic growth numbers, and we have a post auction week, which usually takes the financials down. So my guess is the financials will be under pressure this week, and the stock market will trade higher until the news doesn't allow them to trade higher. The sentiment for the stock market is really, really good. 2050 is a number that's kicked around now. We just made 2,000. We set a new high over the weekend. 2150 is the number that Value Lines retired economist says is a valid, legitimate trading target as long as interest rates stay where they are right now. And then when we took out 1950, people said 2200 was just as high as it could go. Everybody knows that earnings per share numbers are elevated. The most fragile, most susceptible number for any company or any economy is earning per shares. It can change instantly, and that multiple changing can have a huge impact on the value of indexes or a company's stock. So that's the most fragile number that we play with, but the forecast for earnings per share is steady to higher right now. So we're in a very, very optimistic period for the stock market, and we are making new highs in the stock market regularly. So right now, if we look structurally, we've got this 20 area right up in here, 21.5. We have the last rotate up stopped at 17, so I've got my sell at 17 to 21, sell 1. Then we got this high over here at 25, 23 to 27 for sell 2. A lot's riding on this number right here at 56.8. On the buy side, 5 to 9. Letting it go lower. And then 29 to 01. So we're playing for financials to work their way lower this week, basically because it's a post-auction week. Okay, looking at the 30-year, the knob spreads came in quite a bit. That's typical after an auction week. No surprises there. So we got a little extra momentum to the downside, so we'll be a little more aggressive on ourselves in this contract. It's pretty obvious that the 20 area is pretty important to this. Last rotate up was 11, and we're currently at 8. So 11 to 15, sell 1. 19 to 23, sell 2. On the buy side, we'll make it 29 to 01. And then 21 to 25. And our lower numbers here are based on how the knob spread is trading. And we can be a little more aggressive on the sell side. Hopefully we can be a little more aggressive on the sell side, and it pays off for us. Don't you hate it when I say that? Okay, pretty interesting. Internationally, Russia over the weekend said we could take the Ukraine's capital, Kiev, in 2 weeks if we wanted to. And they could probably do it with the troops that they have massed on the Ukraine's border and those that they've already across the border. So gold really got smacked. And that's contrary to the way it has been trading, given the news out of Ukraine and out of the Middle East. So where are we structurally? And you can see right now we have ourselves a move out of the middle, and we have our tractor down here at 1233. We have this low right here at 1260. So the 1250 to 65 area is an area we could look for support, but the attractor's down at 1233. And given that the market is ignoring what's going on in the Ukraine, we have a pretty fair chance of making it to the 1233 area. So like the sell side of the market, they always go a little bit lower than you think that they might. Longer term, I think this area right over in here, this 1233, 1235 area ought to provide pretty good support. So we have a trading target of 1233 right now. Looking at the F2 screen, we've had, 4 distributions lower overnight. That's a bunch. So we have this low over here in the 1275 area. We're at 71, so we have these single prints here. So we'll make 74, 76, sell 1. And then we've got this spill here. We'll make 79, 81, sell 2. Really playing against these single prints, and this spill from London, so maybe retesting 75 right here. On the buy side, we had that 65 area structurally that might give us a bounce. So we'll make 65 plus or minus by 1. And then we'll make 60 by 2. And if one of the contracts where it doesn't make sense to see this selling, I would say gold. Gold is there, but selling it is, and selling it has. Okay, looking at the euro is lower. Doesn't surprise me. I mean, what's Europe going to do about the Ukraine and Russia? And people are trying to say that Merkel has to react stronger than she has. But their hands are tied. 30%, and I mean, they've already shown and they've already said that they're not going to do anything to upset their energy. And Russia will probably be somewhat accommodating, not to upset those sales either, but they're pretty much in the driver's seat, so they might give the EU a little face-saving wiggle room. But, I mean, Putin one day sounds conciliatory. Then he'll come out and say, yeah, we could take Kiev in 2 weeks, and no one doubts that if he wants to take Kiev, he will. No one doubts that it's Russian soldiers disguised as Ukrainian pro-Russian rebels that are doing the bulk of the fighting. They're being supplied. They've had tank columns come in. Kiev has retreated. They're pulling their troops back to protect. So does the eastern Ukraine go to Russia? By default, starting to look that way. Okay, we've had a trading target of 131 for a long time. I don't see any reason not to get there, get stops beneath that. We're at 17, so we'll put buy one at 131 plus or minus, and then we'll make 75.85 buy two. On the sell side, this 33 area, we're at 15 right now, so we'll make 20 to 30, sell one, and then 40 to 50, sell two. And if we happen to get a 50-tick rally in the daytime, we'll be looking to sell it come London. In the night session, for those of you that are fortunate enough to be able to trade London time. It is just a fabulous time to trade gold and the euro, and to look for turns in the financials and the equity markets. Good trading if you've got those hours. Okay, looking at crude. Again, crude's telling us that the supply is not in jeopardy. We had a very, very strong close. We were hoping to sell on Friday, which was a long time ago, at 96 to 96 and a quarter, and we just didn't quite make it. Right now we have this spill from 95.30, 95.50. So 25 to 50 will be sell one. And then 75 to the buck will be sell two. The comments from Obama that we don't know what to do, we don't have a strategy for ISIS yet, has been backpedaled by the White House, saying we don't have a comprehensive strategy yet, but we will do selective bombing in Iraq and attack ISIS that way. They also aren't talking about simultaneously bombing Syria. I mean, these guys, it may be honest that they don't have a strategy or I mean, it's obvious they don't have a strategy for handling this, but you shouldn't be out there officially making that proclamation in front of the world. I mean, it's reminiscent of throwing a stem of roses, or 12-pack of roses, or 12 roses, a dozen roses at your enemy, and playing songs as you march them into your capital. I mean, it's nuts, but it has happened. So the administration is backpedaling that, and this weekend they attacked some targets in Somalia. They also attacked some ISIS targets in Iraq and delivered some aid to some of the people or cities that are stranded. So here we are. We have a very clean breakout from 75, maybe stops beneath this 75, lean against 50, so we'll put buy 125 to 50. But this 75 area. If we hold up and we can't crack 75, that might be where we have to take a long. And then the 93.75 to 94 will be on our buy one. Freudian slip right there. Excuse me, Freudian slip. I gave you my opinion of Sigmund Freud right there. I thought didn't really agree with the way that he saw the world. In 95 and a quarter, 95.50, and then 95.75 to 96. And the E-mini, we made another new contract high over the weekend. A lot of times when we have that, it corrects. And we have a chance to buy a little cheaper. But again, there's no doubt when you look at the screen right here that we have ourselves a strong market that is pointed higher. And we've made another new contract high right here. So right here, the breakout came at 2,000, so buying against 2,000 will be the first trade. And then we have the J period low that started to move up in the 93.95 area. That'll be our second structural trade. Strong market. Everybody's looking for better than expected numbers from the ISM today. P on Wednesday. Friday's non-farm payroll numbers. And then the ECB perhaps cutting the rates. So the easiest trade again is going to be self-failure to take out this 2007. I mean, that is resistance. But the longer-term direction of this market is up. I mean, you can't ignore that. So our buy one's going to be 2,000 plus or minus, and then basically 95 plus or minus. Strong market. I mean, who's kidding who? And you can sit there and say the fundamentals don't warrant it. Okay, I wouldn't argue that with you. Economic growth is slowing around the world. Sometimes the news says that, sometimes it doesn't. What is not being taken away from the stock market is easy money and support by the Fed. That's been a constant. And the market, when times get bad, they buy on that. And when they get better than expected economic reports, they buy on that. So markets PMI at 57.8, it'll be taken into account, but they won't trade it. ISM at 10 Eastern is the big number today at 56.8, down from 57.1. They will trade that. This number been a real history since before the election in 2012 with this number coming in higher than forecast. Those people in Phoenix aren't fools. They aren't going to make a mistake like the S&P did and get fined and their CEO fired. And construction spending up 9/10. Notice none of the other rating services stuck their neck out like the S&P did. None of them have paid the price either. In fact, Geithner told them that Moody's might become the Cadillac of the reporting and rating services. So ISM is a very, very important number today. So we're strong. Would like to buy into weakness to see if we can extend the range. If we can't extend the range, we can play from the short side. Second sell will be 9 to 11. Allow them to trade a little bit higher, but keep a little powder dry for the rest of the week. Okay, it'll take at least 15 minutes to get everything up and posted. I'm going to get busy on that. We'll put the financials up, and I'll be back with you as soon as I can. Later.